G'day, Justin Hogg from RightSource, talking all things accounting and getting you to an insight into how financial statements might work and a little bit more knowledge you might use next time you talk to your accountant. So we've talked about previously what a cash flow statement is, and we talked effectively through what a direct cash flow statement was. What I wanted to show you today was an indirect cash flow statement. So it's the same, gets you to the same number in terms of talking you through what's changed in your bank balance from one period to the next. But instead of talking through three categories like the direct cash flow does, this one talks to you in terms of, well, this is what you made in terms of a profit for the period, and talks you through to why that is different to the cash that has moved through your bank account. So it gives you an understanding of the effect of your profit has in terms of your bank account balance. So if we have a look at an indirect cash flow statement, it has a similar structure to the direct in that it has operating, finance, and investing categories. So it's always good to have an understanding of what a direct cash flow statement is talking about before you look at it indirect. And there's definitely another video of mine if you want to go check it out on YouTube on what a direct cash flow statement. But otherwise, this indirect one, it's really about, it changes how the operating activity section is broken up in that statement. And as I said, it takes you through from that profit and loss through to your operating cash flow effect on your business. Now, stepping through this one, it starts with your net profit, which is your ending balance on your ending figure on your profit and loss statement, and effectively adjust it for non-cash transactions and movements in your balance sheet. So let's just talk through some of these items. So from your net profit, the first aspect it goes through is your non-cash items. Now, generally speaking, this is depreciation, because depreciation is effectively representing in your profit and loss how much your assets are devaluing as they're being used, but it doesn't represent cash. So there's no cash cost to depreciation, so you need to adjust for that. So that's your first step in your cash flow, reconciling the net profit back down. The remaining parts of this operating cash flow section are then adjusting for movements in your balance sheet that relate to cash. So when you look at your assets, the first area that you'll have a cash impact on is your accounts receivable, your debtors. So when people have paid you. Now, because this is different timing to necessarily when the invoice is raised, the movement in your debtors can affect your operating cash flow, because you might get paid for something later, like next period, that you actually earned in terms of revenue this period. So that's a timing difference which it helps represent. Similarly then, the next below that is your changes in liability. So you might have expenses that you incur that you pay for later. So this again helps you with the timing of when that cash is going out of your business. So when you take your non-cash items, your movement in certain assets and certain liabilities, that then gets down to a net cash flow from operating activities, which should be exactly the same as the one that is represented in your direct cash flow statement. With those two figures being the same, that then allows you to understand, by looking at these numbers, how your net profit relates to your operating cash flow, and then how that operating cash flow relates to the overall movement in your cash in your business. And together, this helps give you a picture of your cash your cash movements in your business, and what that means in terms of how you are operating your business. So that's it for indirect cash flow. As I said earlier, if you want to look at a video that talks through how a direct cash flow works and what the meaning is behind that, there's a video I've done previously on that. There's also other videos on the YouTube channel you can check out, whether it's helping you budget or understanding accounting. There's a fair few to pick from, plus you can get some templates down if you need them. Otherwise, please subscribe, because that way you won't miss any more of these videos. It'll help keep building that accounting muscle and helping you run your business just that little bit better. And I look forward to talking to you next time. It's Justin Hogg from RightSource.